OpenClaw scooped up by a bigger parent, ByteDance stepping on intellectual property, and prediction market ETFs, but maybe for the worst possible thing. So your friends at Arcanum Ventures back with another weekly recap now. Welcome back to the Arcanum Ventures weekly recap, where we cover all things technology, finance, AI, hardware, and blockchain. These are your friends Sasha and Carmelo with Arcanum Ventures. We're here to deliver you the biggest stories from the last week, and we've got some big ones coming up. Carmelo, how are you doing, man?
Doing all right. Yeah, just catching up with the news myself and ready to drop some news updates for the people watching. And yeah, we got a lot going on this week, as every week. I think that's not surprise to anybody here watching. But the first big thing, we've been tracking jobs, especially in the US, because obviously the US dictates what's happening in the world, unfortunately, for everybody that's not from the US. But the first thing is that the job report from last year, I think 403,000 jobs were stricken from the report, leaving only 181,000 net jobs for the entire year. So this is a massive overcorrection, and it's kind of informing what the Fed is looking to do. People are anticipating a 50 basis point move by March. So yeah, I don't know what more to read into that, but the economy is looking very fragile and a little bit shaky.
Yeah, compared to our report last week where we talked about potentially a net increase in jobs, we there were some massive layoffs that people believe were the direct result of AI automation tools being integrated across a number of big companies, including HP and Oracle, I believe. But that kind of was, let's say, offset by growing job sector, specifically within service industry and healthcare. But it's difficult, honestly, as an American citizen, to know what to believe, considering a lot of recent news around the Trump administration's push to maybe massage some figures, and that was a lot of controversy around
Yep.
trying to push back on Fed Chair Powell around interest rates. So yeah, I guess the truth will settle over time, but we just got to keep going off these metrics that should be the source of truth.
Yeah, for sure. And like it kind of we again, like last week, we're hearing clashing reports. We're hearing more layoffs than ever from big tech companies, pharma companies. A lot of jobs are being automated away, especially like middle management jobs and entry jobs. So it's a little bit worrying, but any reports that tell you otherwise seem a little bit misleading, or maybe they're not telling the right story. Like or maybe we don't know how they're qualifying what jobs are. Like maybe somebody delivering food for Grubhub is qualified as a job, but not necessarily a job in the classic sense. It's a gig
Mm.
economy.
Yeah, I don't think many people know what qualifies. In other market and financial news, it seems like everyone's buying gold while gold is falling. So, in the short term, gold and silver have been selling off rapidly. It seems like gold is drifting down towards support levels. Silver has put in two lower highs, and copper is heading towards its weakest close of the year so far. At the same time, January last month saw a record $19 billion of inflows into gold ETFs, which is the biggest single month ever, apparently, taking gold ETF assets to roughly $670 billion. So it seems like there's this weird picture happening, right? There's correction, big money is piling in, is treating gold like an insurance policy. We talked before how gold, along with a number of other assets, are considered these turmoil safe havens. We're seeing investors get deeper into gold, and that might be an indication of continued let's say, anxiety within the current turbulent markets. But it seems like that behavior is being amplified potentially by recently seeing all-time highs within the gold and silver markets.
Yeah, I think if it were spiking right now, that would mean maybe people are anticipating some short term turmoil or chaos, but it's more of like a long term hedge. People are anticipating chaos ahead, maybe not necessarily this week or this month, but maybe this summer. But it's interesting. It kind of works like a prediction market in some ways, where if you see gold spiking, it means people are anticipating a lot of violence or some chaos to happen in the news in the next few days. So I guess that's one indicator to look out for.
Mhm.
And speaking of big indicators, like we always joke around about how much AI dictates everything that's going on in the economy right now. You attach AI to anything and it takes off. We've been seeing so many cases of this so far this year and in the last 18 months. And this week, NVIDIA earnings comes out, and the NVIDIA stock is up over 30% in the past fiscal year, which is wild considering I think it's the world's still the world's most valuable company, right? In the
Yeah.
trillions and trillions market cap, or
Right.
definitely above a trillion. And it's significantly up against the other major seven companies. Like Tesla is up only 14%. I saw some interesting stuff too with Tesla. They had their worst Q4 ever for car sales. So not enough people are talking about the sinking demand for electric vehicles in the US and this rise of competition as well. And yeah,
Mhm.
Apple's up only 7%. Meta's down 13%. Sorry. Amazon's down 12%. Microsoft down 3%. So Nvidia is crushing it compared to the competitions. And I think that's a testament to how much chips are in demand right now and how all of these companies, all of the ones I just named, are heavily reliant on these supply chains and these chips from Nvidia to build these data centers. Everybody's building data centers, and there's even been some talks in the U.S. about limiting how many data centers can be built because there's this growing battle of resource intensive data centers destroying communities and sucking up all the resources, water, land, etc.
Yeah, it's an interesting point, right? Because I know there's a lot of discussion around an AI bubble. Many people consider NVIDIA right now, after this 30% run up over the past fiscal year, to really be propping up this sort of AI economy, at least propping up losses for the Mag 7s. And some people say that NVIDIA is really holding up the US or global economy. So I think, the earnings coming out, I believe February 25th, are going to be a huge indicator of what direction market sentiment is turning in, whether these concerns for an AI bubble are going to grow or maybe subside. And this follows massive capital expenditures from NVIDIA and many, many other large hyperscalers across, let's say, data centers, chip manufacturing facilities, etc. They're all reinvesting into this future, but that future is what seems to be right now propped up by speculation. So this is going to be a big moment next week.
Yeah, and what you said has never been more true. The techno socialist country that is the United States actually owns, I think, what is it, 10% of NVIDIA? So it does quite literally, the economy does depend on NVIDIA's performance, which is kind of crazy. I can't imagine saying that 5, 10 years ago and believing it. But
Absolutely.
yeah, in other news, big news from Apple in the tech and hardware news space. Apple's debuting a March 4th launch event, sorry, in three separate locations: New York, London, and Shanghai. So they're covering a lot of major markets there: Europe, North America, Asia. And rumors are revealing that there's several new key products that are coming to set the tone for 2026. And this is in line with one of our thesis. We always harken back to the thesis for 2026 and our narrative predictions that you and I had. And I think you said embodied AI and wearables was a big part of what you're looking for this year. And so far, seems like a stellar prediction because Apple, I think we covered it last week or maybe 2 weeks ago, that they're coming out with an AI wearable pin or a pendant. And now it looks like they're actually coming out with quite a few. They're going to have AI headphone earbuds. They're going to have glasses. They're going to have a wearable pendant and pin. So it looks like they're really leaning into this full steam ahead, and they really believe in embodied AI.
Yeah, it's going to be a really big one to look out for. I believe this is one of Apple's first in-person events in a long time, and many tech journalists are questioning why they're doing in three different locations IRL at the same time. So there's a lot of rumors about what products are going to be, let's say, released at least or announced. I'm hoping that there is some interesting stuff on the wearable side, but I assume that a lot of that is very, very much in the works. Maybe wearables is still a very, very early market, but some speculators are saying that they're going to be announcing new iterations across very familiar product lines, new iPads, new MacBooks, all incorporating the new M5 chip. But most notably, many people are talking about a new cost-friendly MacBook that uses the iPhone A18 chip that supposedly is going to be priced around $700. So this is a really interesting step in a sort of like budget-friendly direction, which is, as we know, very, very contrary to what Mac and Apple have been doing for a long time. So it'd be really cool to see what happens there.
Yeah, I didn't know that. That's pretty surprising as well. Yeah, they're usually known for their premium products, so it's interesting they're getting into that lower caliber market.
Yeah, absolutely. In other news, Tesla is dodging a 30-day suspension in California after removing the term autopilot from their marketing. This
Yeah.
comes after, I believe, in November 2023, the California Department of Motor Vehicles accused Tesla of violating state law by using deceptive marketing practices and stating that they have autopilot, implying that there's complete autonomy and there's full self-driving software. December of this past year, a judge moved to suspend Tesla's sales and manufacturing license in the state for 30 days as a result of this infraction. So I
Mhm.
guess they gave Tesla 60 days to comply, which Tesla did comply. Apparently, the corrective action they took was changing the marketing to say autopilot. I'm sorry, go from autopilot to instead full self-driving supervised. And so apparently that makes sure that they're compliant now in the state of California, and they were able to avoid that 30-day suspension and disruption of their sales and manufacturing activity. I believe since then, they also rolled that out across all the other markets just to bring together this like holistic vision that it's not autopilot in the sense of if you're flying a plane, you could just like go in the back and hang out. You actually have to be aware, maybe like look at the road, things like that. Kind of crazy story, actually.
Yeah, and I haven't been in the US in a long time. And where I'm living right now, there's not so many cars. So this is kind of foreign to me. But I just can't believe that there's so many uh, automated cars getting ready to drive around. And I don't know, like the laws have to change so drastically. Like, can people drink and then supervised drive their Tesla home? Like, how does that work? Like, I have no idea how they can possibly keep up with all these developments in driving right now. And California is obviously the biggest auto market in the U.S., so it's good that they dodged that. That would have been really bad for their bottom line if they had to suspend sales for 30, 60 days there.
Yeah, yeah, absolutely. Living in Louisiana, I can tell you that's probably going to be the biggest draw towards Tesla full self-driving supervised mode is people just drinking their daiquiris while the car's driving. That's just the fun part of Louisiana. But speaking of Tesla, we've got some more news specifically around the topic of their cyber cabs. They're essentially delivering and debuting their very first cyber cabs to customers, and they're targeting a price point that's under $30,000, which is wild compared to all of their other models that are being sold way above that price point. They announced Tuesday that the Cybercab is rolling off the production line at Giga, Texas, which is their large manufacturing facility there, 6 weeks earlier than originally scheduled, and just 20 days after the company reaffirmed that timeline. So they're expanding public road testing to try and build a lot of data around cybercab model usage across 5 states in the US. That includes California, Texas, New York, Illinois, and now Massachusetts. That's going to be fun. Good luck competing with those mass holes, Tesla. And the company recently also began winter tests of the model in Alaska, which is kind of wild. Some of the controversy around here, notable YouTube tech enthusiast MKBHD, also known as Marquez Brownlee, I believe, had betted against Elon Musk and Tesla, saying that there's no way that the Cybercab would be delivered by
Before
2027.
2027.
Obviously, he's a big Tesla fanboy. He has a Tesla Model S Plaid, I believe, and he's a big advocate of what Tesla's doing. But he expressed some growing concerns around logistics and the ability to actually deliver these vehicles and bet that they will not meet that deadline. And if they do, he will shave his head.
My head.
I believe Elon Musk had since tweeted back at him and said, "Get ready, get your razor ready." So it'll be fun to see how that pans out.
Yeah, I think part of the controversy is that it's probably going to happen, but by 2027. And I think the stipulation was that it had to be delivered to a real person that wasn't affiliated with Musk or Tesla for under $30,000 price point, and it has to be market ready. And that's looking a little bit more dubious, but I think that's where it's coming in. Like Musk said, they're ahead of schedule and everything's going to happen. And obviously, we have a year until 2027, basically. So let's see. Maybe we'll cover that in the next few weeks to see what's been developed in the next few weeks. But I don't really know. Musk's kind of hard to believe sometimes, and he's notorious for going to these meetings or debuts and saying wildly outlandish things that never come to fruition. Well, some of the stuff does, but a lot of it doesn't. So I'm kind of skeptical myself.
Yeah, absolutely. This is, I mean, maybe this might be smoke and mirrors. Of course, they stand to benefit from some of these marketing narratives that are being released, especially in, like we mentioned before, a very turbulent AI driven market. So we'll see how this goes.
Yeah. And finally, for tech and hardware news, we have humanoid robots, more robot talk, another one of our narrative predictions for this year. And so far, this also looks like a very strong one, just like embodied AI. And humanoid robots take center stage at the 2026 Spring Festival Gala, revealing China's latest robotic advances. And it looks like China is leaning more heavily into robotics than anybody else. Like the U.S. seems more focused on cryptocurrencies and in AI. It looks like China is fully in on robots. And this is a continuation of what we saw at the opening ceremony and at the Olympics last week. But yeah, more impressive videos that will be rolling right now from this gala. And it has all the usual suspects. Chief among them is Unitree Robotics. And the founder of Unitree said that this year's technical focus will be to enable robots to complete formation changes and movement transitions while running at high speed. The work involves high dynamic motion control and multi-robot coordination algorithms. Such technologies could be applied in the future to collaborate robot operations in complex environments. So there's also debuts from other companies, I think, like Noetix Robotics, and they had a humorous comedy sketch. They did all these coordinated exercises, stunts, backflips, I think kung fu, like everything under the sun. So like this, we've come a long way since those goofy Boston Dynamic robots getting pushed over in a warehouse, like delivering a crate. Like this is looking more and more impressive every week we look at it.
Yeah, absolutely. And China is definitely in the best position. I read an article yesterday speaking specifically about the sheer volume of robotics platforms that have been delivered over the past year globally, 85% coming from China. And I believe they're in this position for a number of specific reasons, right? They have a massive manufacturing footprint, so massive use cases for robotics within manufacturing and warehouses. They also have a massive competitive advantage specifically around precious metals that tie to electronics and hardware that are used for all these robots. And at the same time, we're shifting more and more in towards use cases that are real world, that are actually demonstrating value. So the majority of those robotics platforms that were shipped in the past year specifically for, like I mentioned before, manufacturing, instead of these kind of like shock and awe humanoid robot platforms. It's interesting because there's some more major, let's say, initiatives that are being launched globally in seeing how robotic technologies and embodied AI can support things within military or logistics. And I believe recently the US government had launched an initiative to try and source different talent from different companies to create defense applications specifically around robotic swarms. So, I think a lot of people they're shifting the focus on the robotics talk. They're talking more about what can these things actually do versus, what kind of entertainment value can we get from them. This showcase here from the Spring Festival Gala obviously focused on entertainment, but, it does show capability.
Yeah, and I think like you're absolutely right. Like that's the asterisk next to our narrative prediction. We're going to anticipate more usable robots that don't look like humanoids from Star Wars. But like we saw with like ChatGPT, when ChatGPT and OpenAI first debuted, oftentimes the thing that people concentrate on the most are the most ridiculous, outlandish, performative things like crazy videos that you can do with it. But the the more important use cases are the ones that people don't understand right away. So I think the same can be said here. And I think I saw a development from a German company yesterday. They're replacing the need altogether for forklifts with like autonomous robots that kind of look like Roombas in factories. So like this kind of thing we're going to see more and more. And it's not as glamorous, but it's probably going to make way more money than
Yeah,
these kung fu robots.
absolutely.
All right, moving on to AI news. I think we talk about this guy and his companies every week, but Europe's privacy watchdog launches a large scale probe into Elon Musk's X. So, the European Union's data privacy watchdog has launched an investigation into Elon Musk over sexualized images generated by the social media site's AI chatbot, Grok. And this is nothing new. We talked about it a few times in the last week, but there's been
Mhm.
more and more mounting pressure from France, the United Kingdom. I believe there was raids on offices in Spain and France over election interference, but also this is more of a pressing matter for them, ironically enough. So, in particular, the Commission will be looking into whether X complied with the EU's flagship data privacy rules and the way that it's handled the personal data of the bloc citizens, which is interesting because, like, some on one side you have people saying like this environment's not conducive to the growth of AI companies and they're not really doing enough to accelerate AI, but on the other hand, they're more protective of their people, saying like we want to protect their data because these companies cannot be trusted. They've been stealing intellectual property from other studios and artists and people, not to mention stealing and training on government data. Like in the US's case, we saw with Grok being trained on voter rolls and US citizens' data. So they are looking into this and trying to. I mean, obviously, it's no secret that they don't like Elon Musk that much. They think he's interfering with the EU's sovereignty.
Yeah, absolutely. I mean, Europe is well known on the regulatory standpoint for protecting citizens' rights around data privacy, and many startups and many large technology companies have always seen that as a kind of barrier to penetrate into that market. But I think a lot of Europeans I know in particular are very proud of that fact, and you do see most of the action on the data privacy front coming out of Europe. In my opinion, this is kind of like too little, too late, right? It's maybe it was just like a bureaucratic mess and paperwork to actually move on this big issue that happened on X, which we've mentioned several times before.
Yeah.
But it is something, and I think a lot of these companies are not held accountable enough to this exploratory behavior that they're exhibiting using these AI tools. It's just like this is maybe one of like a dozen instances around like X and Grok AI and Mecha Hitler and all these things, right? It's just controversy after controversy. So I don't know if this is going to teach anyone a lesson, but a slap on the wrist is better than nothing, I suppose.
Yeah, I think it's just drawing a line in the sand. And I'm not even European, but I live in Europe and I'm proud of it too. Like I think a lot of people are too much on the other side saying, oh, they're worried about these draconian initiatives that are limiting growth and blah blah blah. But I worry about the keeping these companies in line and protecting people. That's more important to me at least.
Yeah, absolutely. Moving along the AI timeline, ByteDance has been pledging safeguards around their recent video generation software Seedance 2.0, which has been described as too good. Apparently, it's an AI video tool that's gone viral for generating hyper realistic clips, most notably and recently of Hollywood stars and copyrighted characters. So, since then, they've received cease and desist letters from Disney and some other motion picture associations over unauthorized use of intellectual property, which is a huge deal. We know that Disney is very aggressive when it comes to pursuing action against intellectual property infringement. Disney accused ByteDance of hijacking their Disney characters and reproducing and distributing creative works using their AI generated tools. And this includes also Marvel's Wolverine and some Star Wars characters. So since then, the Motion Picture Association CEO Charles Ripken said that ByteDance is disregarding well-established copyright law by launching a service without meaningful safeguards against infringement. And I don't think this really surprises anyone, right? We just talked about this on the XAI or Grok AI side. It's just testing these boundaries of this technology and seeing where they end up by taking something to market and have people using it. And again, data privacy and intellectual property seems to be an afterthought, where many of these companies will just pay a big fine and continue to move on. But I don't think that big corporations are going to stand down from having their businesses threatened like this.
Yeah, and this is kind of like what we saw with Studio Ghibli. I never get that one right. But when everybody was going through and making these Studio Ghibli memes, and that was just photos, people posting online. But now these videos are bringing it to the next level, and I think we're overlaying some clips right now from some of this Seedance output. But some people, I think it's quite funny, to be honest with you. Like, it's serious, but people saying, "Hey, we can finally fix the Star Wars movies ourselves," and people, putting out way more impressive Star Wars clips, pod racing and stuff on like other planets. It looks like it probably was created in a studio that creates these same special effects. Like, it's very impressive. And then, people clashing together, doing these. Almost like spin-offs. Like, I remember when I was a kid, we'd watch like Scooby-Doo, and they would have like Scooby-Doo meets Batman, or Scooby-Doo meets like the Harlem Globetrotters, and that's what it feels like. Like, I think there's a clip of the Marvel's Avengers meeting up with Walter White from Breaking Bad. So it's very confusing times, and I think like Disney is right to challenge this, again, drawing a line and challenging what these companies can do. So they're saying they're going to curb this, and they're going to make sure it doesn't happen again. But I have my doubts about this. I'm pretty skeptical about all this stuff right now.
Yeah, absolutely. It's just like it's an exercise of maybe limiting or eliminating training data for these models. We'll see how that pans out.
Yeah, and in other news, I'm a little bit disappointed by this one, to be honest with you. But OpenClaw creator Peter Steenberger joins OpenAI, which is sad because I thought this guy's already made his money and he was just doing this as a passion project. Maybe it still is a passion project to him, but I mean, he named the thing OpenClaw, so he was obviously more in line with Anthropic and Claude, and now he's joining the dark side with OpenAI. So Peter Steinberger, he's moving from Europe to San Francisco, and I think he's been quite vocal about the EU stifling progress. So it's, again, a continuation of the conversation we've been having, but is Europe the right place to launch a tech company? Are they doing enough to accelerate AI, or is the general sentiment of AI right now, much like blockchain, it's pretty negative because of the people that are embracing it, and everything's political in this climate. So he's been quoted saying, "What I want to do is change the world, not build a large company, and teaming up with OpenAI is the fastest way to bring this to everyone," ironically. So yeah, I think this is an interesting development. And funny enough, a side note, shares of the UK computer maker Raspberry Pi jumped as much as 42% in a record 2-day rally amid social media chatter about its low-cost single-board computers. People are buying these instead of the Mac Minis, because the Mac Minis are obviously much more expensive, higher price point, and not necessary to run this framework. So I think people, anything agentic right now is quite buzzworthy, and now it's just going to accelerate if OpenAI is embracing this.
Yeah, it's a really interesting move on both sides, I think. And you wonder what like the core motivation was, right? Peter's saying that the acquisition of OpenClaw by OpenAI is a great way to get this technology out more to the masses. This is a technology that like took the internet by storm and was at the masses already. Like, everyone was talking about it for an entire month. And so you wonder, OpenAI that's acquiring OpenClaw, maybe that is to fit some sort of technology or product gap specifically within their push into agentic AI services and infrastructure. But I don't really believe so, because they have Codex and some other technologies they've been building, I'm sure, for a while, specifically for agentic services. And so, are they trying to acquire the brand notoriety and the user base? Maybe. I think one of the comments on Sam Altman's tweet, funny enough, is from a well-known account on X, Autism Capital, citing "closed claw it is, end of an era." And so you wonder how they're going to take a lot of these open claw users and fold them into the open AI model. So it'll be interesting to see how that pans out. But again, this is setting, it's kind of like shooting the starting gun for a lot of these companies, including Anthropic and Gemini, in getting more notable agentic infrastructure to market, because now they have to compete with a player that scooped up the most popular one.
Yeah, I think it's a smart, savvy move by OpenAI to capitalize on this giant news story over the last, like, it's been one of the biggest stories of the year so far. And yeah, I don't think it will end up being that impactful because I think, like, tech moves quickly, copycats come and go. So these other companies are going to probably make similar moves, but yeah, I don't know if it means closed claw or what they're going to do. I think they said some sort of foundation, so it's not going to necessarily be under OpenAI. So maybe there'll be more open source, but who knows? But what I do know is that it's interesting from a VC standpoint and from a builder standpoint, because you and I often talk about, and I think you put out a good video this week about funding. So check out our YouTube channel and the link right here for this great video on fundraising. But companies often take the traditional route of like asking for money from VCs. But this is an example of a patient guy who just did it himself. He built something open source, and it's another alternative route that he took. And now he's working with one of the biggest companies in the world, doing what he wants to. And he didn't need the money. He came out of retirement for this. So it's pretty interesting the route that he took to get where he wanted to, all doing this under an open source project that was essentially for fun or a passion project.
Yeah, absolutely. Okay, and moving directly into blockchain and cryptocurrency news, we've got a big story here. BlackRock launches on Uniswap, and this marks a massive milestone for tokenized assets, having hit close to $25 billion in tokenized real-world assets in January, which is an all-time high, signaling that this meta is not a fad. We're going to continue to see more traditional financial institutions bring traditional financial instruments on chain. So that influx, I think, is just going to grow. But BlackRock has brought in its US-backed treasury token known as Build onto Uniswap, which is, for those of you unfamiliar, the leading decentralized finance trading platform and potentially the original one on Ethereum. The firm is also invested in Uniswap's own governance token as part of the move, joining other major stakeholders like A16Z that exercise decentralized decision making on the protocol. But this marks the first integration of a tokenized money market fund within major DeFi infrastructure like this. So very, very big news. I think this is a strong signal for decentralized infrastructure and the interest in getting listed or taking an asset there to access an entirely new market.
Yeah, would you look at that? Another prediction right on track for us. we're killing it so far. But tokenization is hitting all time highs. More and more assets. There's more demand. There's more companies pivoting to this. Even bypassing Bitcoin to look directly into tokenization. So this is the real innovation here. And keep your head up, crypto people. There is still opportunity to get rich in crypto, but it's not what you thought. It's just for Uniswap and BlackRock. And interestingly enough, we're seeing this consolidation and like these acquisitions, these combinations. It's more in vogue now to like work with companies that are long established. Like Uniswap's been around forever at this point, an eternity in the crypto space. So I think we're seeing less people launch companies, meaningful companies, and opting to work with ones that are established, even if they haven't done much in their several years of existence. Now is the time to work with them because they've at least been around the block long enough to know how things go. So quite good for Uniswap holders if BlackRock is investing in the token, and quite good for everybody involved. I don't know, unless you have exposure to those assets, you maybe don't really care about the story, but it's just going to be a continuation of the trend of tokenizing more T-bills and strategies and whatever, ETFs. There's going to be tokenizing everything, real estate, you name it.
Yeah.
And speaking of that, we're moving on to Peter Thiel and the Founders Fund exiting the Ethereum treasury, ETHZilla. We've seen this in a recent SEC filing. And this is interesting because this is one of the warning flags we've been raising since these strategies came to fruition after strategy, these copycats. And everybody's excited when they buy these large holdings, but then nobody talks about what happens when they dump them in the market. We're too dependent on these stupid strategies. And now we see what happens when, selling a 7.5% stake in the Ethereum treasury firm, ETHZilla. So I think this is also in line with the story we just talked about. They're opting instead to go with the tokenization narrative instead of directly investing in Bitcoin or Ethereum, because they know that this is the next meta. This is what people will truly be concentrating on in the next 12 months.
Yeah, it's an interesting one. I think I've kind of been waiting around for this point to happen, and all it took was an aggressive market dump, like everything else.
Yeah.
I think this kind of like shakes out the weak players. And who would have thought that treasury accumulation vehicles and digital asset treasuries were weak players? Well, maybe anyone that realized that their assets were trading on net asset value multiples upwards of 2x. And so, all these companies that issued these assets or stocks or debt under their digital asset treasuries that were holding some collateral or some value backing in Ethereum, all of a sudden that investment opportunity for the other end of who they're dumping that onto, it doesn't look so good anymore. And so it makes sense that, with this sort of market movement downward, there is this consolidation isn't the right word, but like I said before, maybe settling where people are realizing, oh no, we're losing money. Let's go back to fundamentals. And right now, the best bet is, like you mentioned, tokenizing, but also just these foundational assets. Many people were very excited about these DATs and TAVs coming to market because they pose an opportunity for big players with big money to come in and scoop up big amounts of Bitcoin, ETH, and whatever. But, they just kind of fueled the speculation cycle by offloading it into potentially, your grandmother or auntie. So we'll see how this kind of settles out. I think this is not the last digital asset treasury that we see
No.
that's kind of like going to collapse.
Yeah, ironically, the only one that's like above water right now is Sailor's Strategy, and I think they just reacquired a bunch of Bitcoin, lowering their price point, which is crazy because they haven't done that in a few years. So, they're they're chugging along, buying Bitcoin well below what people are pricing and valuing at. So I think they just lowered the point to like 68,000, if I'm not mistaken.
Mm. Well, they have to because as soon as they stop, I think they admit defeat and then the whole thing
Yeah,
falls
yeah,
apart. So, we'll see. The Michael Saylor's just playing 20 different games, I believe.
yeah. I
But
mean,
on
banking on it.
on similar ETF news, we've got some wild news coming out, specifically from the Trump camp. So Trump and Truth Social announced an ETF in the works. The funds are called Truth Social Kronos Yield Maximizer ETF. I can't believe they used the word maximizer in the title. The Truth Social Bitcoin and Ether ETF, the tickers being CRO, BTC, and ETH, respectively. The social media platform founded by President Trump in 2022 and operated by Trump Media and Technology Group said Friday that Crypto.com will serve as the digital asset custodian, liquidity provider, and staking services provider for the ETFs, all by Crypto.com as well. So this is wild. I don't think I've seen, an ETF take, let's say, derivatives or utility tokens, really like that incorporates the value backing. So I don't know if there's a lot of demand for something like this, but maybe the bet that they're making is that Trump has probably the biggest follower and the most number of eyes in the world. So, they're going to be able to offload it onto somebody.
Yeah, I think it was several months ago, was it, that they, World Liberty, the company run by his family and him or whoever, they bought a bunch of CRO, and it kind of raised a lot of eyebrows because like this seems random. It's supposedly like decentralized network, and it's not like one of the usual suspects. But I had my doubts, and I think okay, there's a deal in the works already, and it looks like it's coming to fruition. Now it's let's create an ETF out of this, out of their own holdings. They've probably got some shady deal with them. And I saw some funny comments on Twitter about this as well. Like, hey, can we open up a prediction market for this if the SEC pushes this through or not? Like, obviously joking because, Trump is president. Of course, this is going to go through. Who's going to stop it?
Yeah.
So it's kind of wild. You're right. Like that we're seeing an active sitting president with the company that he's not supposed to be in charge of while running the country. And now he is pushing for ETFs in cryptocurrency, which I never thought imaginable 5 years ago or 7 years ago when cryptocurrency was, everybody working in the industry was persona non grata. And now it's quite the opposite.
Yeah, looking for the silver lining everywhere, pun intended.
Yeah, and then finally, more ETF use. Yay! Bitwise aims to offer prediction market ETFs for the U.S. election in 2026 and
Oh my
2028. So
god.
the midterm elections and the presidential election in 2028, if we have one. So the global crypto asset manager Bitwise, which oversees more than 15 billion in assets, has filed to launch prediction shares ETFs designed to track 2028 U.S. election results. The filing shows plans to launch 6 separate ETFs tied to the outcomes of major U.S. elections. So 2 funds will track whether a Democrat or a Republican candidate wins the presidency in November 2028. Another 2 funds will focus on which party gains control of the U.S. Senate in November 2026. With the remaining 2 funds will track control of the House of Representatives. Out of all the dystopian stuff we've covered on the show in its short existence in the last, 1.5 months, this seems maybe the most dystopian. What do you think about that?
I'm like, for a moment there, I was kind of speechless. So like the prediction markets played a pretty interesting role in the last presidential election. So it's not like there's no demand for that. I think a lot of people are very interested to see how prediction markets were positioned to evolve with the upcoming interim election and the 2028 presidential election. What really concerns me is what I've been expecting for maybe the better part of a year since prediction markets really came to market, which is how are these markets going to bring some form of leverage or risk amplification to the masses? And I think this is a step in that direction, creating ETFs or derivatives from these assets that are like they're underlying with these assets, and these assets are underlying some portion of truth and a lot of market manipulation. And so I think this is opening up an entire Pandora's box of further market manipulation, media manipulation, and all sorts of other things, dirty things that we're going to see in this next election cycle that we don't even know yet. So I'm really concerned about what this is, and I'm concerned about how people are going to just kind of use it as like some gambling mechanism without understanding that there are all these lawmakers and decision makers that are part of this market. They're creating the market and participating in it, and they might be battling against you. So I don't really know what's going to happen here. I just don't like this at all.
Yeah, just more room for manipulation and more gambling, more financialization of everything. Everything is gambleable, I guess is the word. It's weird that you can gamble on just about anything now. And I think we saw some recent developments over the last few weeks of there was a soldier in Israel, I think, that was he was arrested for leaking information about strikes, and the account went inactive for a while, and then it was activated again, and then another eerily accurate prediction, and then there was another one. I think it was. Did you see the story with Tesla? Or sorry, what is it? The SpaceX. Somebody there was an engineer that engineered a
Yeah.
fraudulent, like he purposefully broke a part in the rocket and installed it, and he had $80,000 in debt, and that was the bet that he made on a prediction
Oh
market
my
that it wouldn't.
god.
So we're going to start seeing more and more of these stories the more prevalent these prediction markets get, and that's worrying, especially when we're talking about stuff as big as like the elections for the United States.
Uh,
Finally, that's been quite a lot of news for this week, but we're going to tie it up like we always do with the biggest fundraising news of the week. And we alluded to some of them in the beginning, I believe. But first on the list is Anthropic, a company we're all familiar with. They raised $30 billion in a Series G funding led by GIC and Cotu, valuing Anthropic at $380 billion post money. The round was co-led by DE Shaw Ventures, Dragoneer, Founders Fund, Iconic, and MGX. That's pretty crazy. Like, most companies never even get 10% of that valuation, let alone raise $30 billion.
I I swear to God, I've never seen Series G in my life before.
Yes. How much money do
And
you
I
need?
think, I think we should create a prediction market on which series they get to. I mean, Anthropic, OpenAI, all these companies, right before they go public. So I'm gonna bet Series K, and yeah, we'll just launch that market tomorrow. If you're interested in dumping your money into it, please, we encourage that. This is financial advice.
Yeah,
So
I
you
wonder
know,
when we're going to see the world's first Series Z, if we haven't seen that already.
ah, man, but this is important, right? Because OpenAI was approaching a $1 trillion private valuation. Anthropic is on its way there. We're at very troubling times, and this goes to feed into that concern around a growing AI bubble. We've never seen things like this before.
Yeah.
But moving on, as of this past week, defense tech firm Anduril Industries is in talks to raise up to $8 billion in a new funding round, potentially valuing the company at over $60 billion. Way more reasonable, guys. But this follows a $2.5 billion, again, Series
Series
G
G.
round in June. That valued the company at $30.5 billion, indicating rapid growth and intense investor demand. And maybe this is kind of setting the precedent of let's like rapidly raise funds for specific, very micro milestones. I don't know if this is the best strategy, but maybe it provides a little bit more flexibility and of accountability to investors that are asking, what exactly are you going to do with my money? And what can I expect in the next 6 to 12 months? So big news there.
Yeah, and I hate to be that guy, but another prediction for this year, defense tech. It's kind of an obvious one, but more countries spending more money on defense. It only makes sense to raise money right now and boost those valuations. And next up, we fortunately don't have a defense company, but Temporal, a Bellevue, Washington-based platform designed to help developers build apps that run reliably. I can't say it reliably. Raised 300 million in Series D funding, so a little bit earlier than Series G from the last two companies. And that round was led by A16Z as well as Lightspeed Venture Partners, Sapphire Ventures, and others.
Yeah, I mean it's quite a generic thing, and I don't know much about temporal, but designing apps, or designing infrastructure that helps app run reliably. It sounds like of course, very critical, but it sounds like they have a lot of competition there. It's interesting to see what A16Z might see in them.
Yeah.
Up next, we have Render, a San Fran-based cloud platform for app developers, raising 100 million in a Series C fund. Georgian led the round and was joined by existing investors, Addition, Bessemer Ventures Partners, General Catalyst, and 01 Advisors. So very, very interesting there.
Yeah, more like I think it's like the last one. It's not like the most interesting thing, but those are the picks and shovel companies are the ones that are the most reliable to invest in. I think. I think you believe that too. And finally, we have Moab. I think I'm pronouncing it right. A New York City-based developer of an operating system designed for equipment rental and dealership businesses. They've raised a measly, piddly $16 million. Just kidding. That's a lot of money. Across seed and Series A round. Okay, that's actually pretty reasonable. Seed and Series A. So early compared to some of these other ones. And Elad Gil led both rounds and was joined by Iron Spring Ventures and other angel investors here. So another American company getting early seed and Series A funding.
Yeah, big difference in those funding rounds from top to bottom.
Yep.
Well, that's all we got for this week, friends. And again, I want to remind you, if you're enjoying this content, make sure you tap that like button, throw us a follow or subscribe, join our Telegram community, check the notes in the show notes below, the links in the show notes below to find us across different social channels. Very happy to stay here with you and provide you all the major stories that come across our plate within the worlds of technology, hardware, financial markets, AI, blockchain, and more. We bid you a very safe week and then hope to see you next week as well for our next weekly recap. Thanks, y'all.
Ciao, everybody.
Doug.